identify where are the areas that it should take profits at. So you see here, this is support. A price has not been able to break this support since May of 2017. So this is a perfect example of what you call a fake out. So YOT, I believe you asked me, can price just go back up or go back down? Yeah, it could. And this is considered a perfect example of a fake out right here. This is good to identify fake outs because you never know them. I mean, look, this is what the market makers are doing. They're making you think that this breakout is going to continue downtrending. And all reality it just came back up. So, we try with our probabilities to eliminate this, but, there's no guarantees when a fake out will come, but we use our best probabilities to avoid that. So this is a perfect example of trading with the trend. The breakout, you drew your support and your resistance for your target areas. And now I drew my trend line over here because I'm waiting for price to break out, which it did. Price just literally broke out of it. And it's playing here. So for me to get into this trade, this is why I have two lines right here, because I need my trade, my candlestick to close above this line right here. And this is why I did that. You guys can see this. I drew these two lines really, really close because I need price to break out of this area for me to enter a possibility of a buy. Does this make sense to everybody? And does anyone have questions on why I picked this area and why I marked it up the way I did? I'm leaving it up to people to ask me questions.
Hey, Kim.
What is your name, please?
Jorge.
Jorge, hi, how are you?
Good. I just have one question. That daily trend line, going all the way up, it looks like it's not really touching. It's kind of just going through so I was just asking, what's up with that?
This one, okay. So you mean this one right here, this circle right here?
Well, yeah. Also, just the trend line kind of just goes through the.
Yeah, I you know why? When I was on the weekly, it moved, so I can just readjust it. That's not a problem. Because when I move on the weekly, it will move it according to it. But I can fix it. It's no problem.
Oh, okay, you're just looking at it.
Yeah. It's because I was on the weekly before in my session. So when I was doing it, I have to readjust it when I go onto the different time frames.
Got it.
It's still accurate. This is a breakout, right? The market gapped over here, and you're gonna have that with your trend lines. And I'm not gonna move my trend line here because this is not an accurate trend line. My trend line is currently accurate the way it is. You have multiple hits. Unfortunately, you had this breakout right here. Price never closed at this gap, as you guys can see. But over here, overall, this is an accurate trend line. I just didn't readjust it because I was on the weekly. But this is what you will see as a trend line. So every time price came to this area, you would have bought. And here, it broke out, so you wouldn't be buying here anyway. That's why you have to be patient with these trades. Sometimes these wicks get you, but that's why if you're a patient trader, you would know, and you would wait for it, make sure, because anytime, even if you're on the daily and you're seeing the candle physically break this trade, this trend line, you're not going to get into it until it closes either above it or below it. Okay, and this did the middle, so this wasn't even, you wouldn't have even entered this trade because of how the two candles closed. So that wouldn't even have made you guys lose this trade. This one, if you would have broken out, you would have, and it closed below it, you would have gotten in for a quick sell, and you would have used these areas right here. Okay, I'll tell you right now. Previous resistance, right? You have here. Okay, another area, and boom. Price came to these areas, guys. Price repeats itself. I sound redundant when I say it, but history repeats itself. Like, you could have gotten to your sells here. You wouldn't have known where it would have stopped, but you would have had your target areas. And it doesn't look like a lot, but this is a 348 pip trade right here, guys. So the trend line is pretty accurate. If you look at it, you may have some fake outs, but 90% of the time, it's very accurate, these trend lines. and I trade off of them all the time. That's exactly how I trade. So right now, this is a good trade to look at. Why? Because price is literally playing around it. You want to call it safe. Wait for the candle to get here. Let me show you guys. Wait for the candle to get right here above this line. Okay? That's how you wait. You wait for price. I don't chase no price. I don't chase no candles. If it doesn't come to my area, I don't trade it. I don't care if it's a good trade or not. It has to come to my area before I execute any trade. Gustavo, do you want to add?
That's where you look for the buy, right? Where you said it'll hit the area?
Yeah, that's where I would look for a potential buy. That is correct.
Yo, I got a question.
What's your name?
Juggy.
Juggy? Hi, Juggy. How are you?
I'm good, thanks. What about you?
I'm doing, good. I'm excited to be on here with all you guys. I love doing this, so I'm excited.
Lit, man. What moving averages? What moving average is that green one?
Oh, I'm sorry. I didn't even go over my moving averages. I use the 50, the 50, the 200, and the 800.
EMA.
EMA, yes, they're all exponential. Yes, all three are EMAs.
Yeah, I use them too. I'll just make it sure.
Yeah, I just use them just as a guide. It just brings out the chart better for me, and I just use it as a guide. I don't, that's what I use it for, just as a guide to basically look for price. Because basically, they're measuring, the last 50 candles, the last 200 candles, or the last 800 candles. That's what moving averages are doing. So it's kind of good to see overall where price has been going. I'm very big on history, so I pick these particular moving averages because for me it smooths out the market for me, and I use for crossovers as an indication for a trade that's going to break out of a trend. Any other questions?
Yeah, I got a question.
To add on to that, let me add on to 1 second.
I'm sorry, real quick, can you repeat the moving averages one more time, please?
Yes, 50, 200, and 800. Did you get it, hon?
Yes, thank you.
You're so welcome. Anybody else? I heard somebody else wanted to ask a question.
I wanted to add on to that, Kim. As you guys can see, she's trading a pair that is traded a lot amongst a lot of people, all over the world. I don't know if you guys know, I actually called out a buy on EuroJPY yesterday night, I believe, and it hit TP1 for 50 pips. Me and her were talking about this. One thing I'm going to share, as soon as she's done with marking her chart up, I'm talking to you guys about key levels of support or resistance. Once I show you guys my charts, you're going to be like, there's no way his charts look like that, because my charts are simple. You'll never see any crazy lines on my charts, and you'll understand how to read a price. A lot of people, don't get me wrong, they like to use indicators. It's okay. I'm just not a believer in indicators. I don't believe in EMAs. I don't believe in MACD. I don't believe in RSI. I don't believe in any of those. My indicator is the eyes and price.
So you use no indicators at all? At all?
No indicators at all.
I feel that.
Bibs, stochastic.
I'm going to pull up my charts, but what I want to get to is, as you guys can see, this daily trend line. This daily trend line. This trend line is going to play a very key role. It's going to play a very, very big key role. So as long as you see this trend line, you might not see much action on it. But this right now, where price is at now, and where this trend line is at now, is a very, very critical moment. But, Kim, I'm going to give it back to you. As soon as you're done, I'm going to go over what I want to go over.
I'm pretty much done with it. With this markup, this is basically how I have it. I keep it pretty simple with my markups.
So, Kim, you don't use any indicators at all either?
I just use these moving averages. That's all I use. That's it. You don't see anything else on my charts. I don't use RSI. I don't use MACD. Because they're lagging indicators. Even though moving averages are as well, I use them as a reference and not as much as, it's just like a reference just to see, because I'm big on price and I'm big on like price history. So I like to know where price was in the past. So basically, when you're seeing, like, for example, you have an 800 moving average right here, right, guys? This is basically telling you where price has averaging out the last 800 candlesticks. So, like, if I use it for different purposes, what others use it. Other people use EMAs as, like, their go-to, like, I know when to get in, I know when to get out. I use them more as in a different sense as opposed to what other people use them. And, like, obviously crossovers, do indicate when there's going to be make a turn in the market. And when you see moving averages widen, or when you see them get close, those means that they hold a significance on a chart. But it's everyone's preference. Gustavo doesn't use them, but I use them. So does it make him or I a better trader than one another? No, we're just two different traders, but we trade very, very similar at the same time. Me and him can have the same results, but we got our results, just using different techniques. Doesn't mean, one is better than the other.
Okay, thank you very much. Thank you.
You're welcome. Gustavo, you can add in the rest of your input for this pair.
Yeah, I mean, that was pretty much it. That was
okay.
Pretty much it, yeah.
Okay, so then I said what you had to say, right? Great minds think alike, right?
Yep.
So EJ not in a downtrend right now through the day chart?
Not right now. It's not telling us anything right now. It's just right now. It's just playing on the trend line. So for me, maybe for a scalper, they may see a potential sell. I'm looking at what I see on the daily right now, and right now I'm waiting for price to fully break below it or above it, so I know what move I need to make.
So when you draw your trend line, it's always on the daily?
Always on the daily. And I do it on the 4-hour too. It all depends. Like, most of the time it's always going to be on the daily no matter what. But I can open the 4-hour chart for you guys just to show you that. Look, it broke above it on your 4-hour, right? Well, actually, I need to adjust it. You see why I always have to adjust it when you're moving into different time frames? You got to readjust this. Same when the guy asked me about my trend line before, because it was from the weekly. So right here. So
can you check out AU afterwards?
Excuse me?
AU afterwards.
AU. Yeah, Gustavo would tell me what pair to go over afterwards. I guess he's doing it based on what people are picking in the chat room.
Yeah.
Just one quick thing. Could that trend line be valid for do you know when it looks like it kind of broke through and retested and it's kind of gone up again? Would that be like a separate trend line?
I don't know what you're talking about with that one, but let me delete this one. So maybe it's too many lines out here. Hold on. All these things to get them out of here. I don't want to confuse people. What are you talking? What's wrong? You said something about this trend line.
One sec. Annotating it.
Yes. Let me know. What are you seeing?
See it.
Someone. I think that's someone who drew on my chart.
Yeah, that's the trend line. Sorry, I'm seeing.
This is not. I didn't draw this. This red thing is not me. It looks like someone drew on my chart. This is the only thing I want you to look at. This purple line right here, what I just fixed on here. This is the 4-hour time frame. So price is literally on the trend line. You want to be patient to see exactly what happens. So let's open the 1-hour time frame. So this is how I start looking at. All right. So let me open the 1 hour.
I have a quick question.
Yeah, of course. Ask your questions.
When you're drawing your trend lines, do you use the wicks or do you don't use the wicks? So I'm hearing different things from different people.
It's a preference. That there's no right or wrong for that answer.
All right.
It's all preference. Some people use the wick, some people don't. It's literally all preference.
How about you? Do you just use the wicks or just?
I just do the wicks or the buy. It depends on the pair. Sometimes because I try to make it as even as possible. So sometimes you may have one wick and then you have like a little wick that's mainly a body. So I play around with it. You'll get used to playing around with them until you finally see, okay, this is how it should look like.
Okay, thank you.
Yeah.
Hi, Kim. May I have a question?
Sure.
It's a David. This trend line which goes across at the top and it has only 2 touches. why this trend line can be adjusted a bit lower on the lower end?
What do you mean on the lower end?
I mean the topper end.
Oh yeah, I'll just delete it and I'll make a new one without a problem.
No. I mean because you just moved it at the top, but for me it looks like it could possibly go from the top on the left, right, or to the bottom on the right hand side, right, and then you have four touches, right, and then you have breakout and then the test of the trend line, and then it goes up. Am I correct, or that doesn't make any sense?
I see that too.
Bit lower.
You're saying what? That if there's 3 to 4 touches, it breaks out?
No, I mean this trend line which you just drawing. Can you just lower it down? This end, right end.
Okay. You want me to lower this side up here?
Yes. Well,
you mean lower it going up or down? Like
down. No, not this trend line. The other one.
What do you want me
this
to do?
one?
Down?
Yes.
Yeah, I know. That's the trend line I was doing.
Yeah. So if you could lower it
move it below price.
Like this?
Yeah, a bit more. You have 3 more weeks.
Oh, that doesn't make a difference. Whether I put it here or here, it's still the same thing. If that's what you're asking, it doesn't.
No, I mean, if you could move this one lower, and then this one is not gonna make a breakout, and then retest of the trend line, and then trend up.
Please withdraw.
Gustavo, you understand what he's asking me? I'm trying to understand.
I really don't.
Where the 50 and the 200 cross.
I think he's trying to put it on the body, or what he's trying to do is put it lower so he can see that price is testing the back of that trend line. Am I correct?
Yes.
Where the 2 EMAs cross.
Okay. Yeah. Okay. Yeah. Just lower the
green one with the purple.
Here, look. Give me a second. Hold on.
The green crosses with the purple.
Kim, let me get your screen real quick.
Yeah. I'll prove it.
Nice.
Me myself.
Is this what you're referring to?
Yeah, and bit lower, because now it's gonna change everything. It's gonna change all picture. Bit lower.
Way lower.
Yeah, way lower. Yeah, something like that. See?
There.
Because now what's going that now what it's showing us is breakout.
It's showing reaction. Yeah, it's showing reaction to the trend line. Correct?
Yeah, now it's just broke the trend line and then went back down to retest it and went up again.
So what's going on?
If you could zoom it out, and then you can make this trend line longer to catch the other top on the left hand side as it used to be before.
On the H4.
Zoom it out on the H4, and that would make different sense and make a different picture from that which you originally done. I guess it should catch it up with the other top. See? Yeah.
Okay. I see what you see. I got you. Yeah, I see what you see.
Because I think like
because it depends who looks at it, then you can see different things.
Correct.
Because that what you said originally, you've been still waiting for the breakout, but possibly we had this breakout already, and some traders might set put the buy limit or just buy. Wait.
I thought it was a sale the whole time. I would have lost bread.
On what? On this pair?
Yeah, I thought it was a sale the whole time.
Oh my god.
That's why you always have. That's why I always wait for my trend lines. I wait for it. I'm more conservative type of trader.
I put my trend line on there different though. Mine's wrong. The way I put it on there, so that's why I
think
thought
that
it was
if
a
we
sale.
put a trend line to the top, we could create a channel, and it could retest the top trend line where Kim had it previously.
But I'm guessing you probably drew that trend line before, like the rest of that price was even there, though. You know what I mean? So it looks different.
Okay, dope. All right, Kim, let me move on because I'm gonna be ending this very shortly.
Okay.
Anything else you want to close off on, EJ?
Does everyone question? Do you want to finish it off from what I left off? I mean, I pretty much marked it up the way I have it. So
yeah, I'm about to do a quick rundown and we'll call it a wrap. So we all
I got a
good?
quick question real quick before y'all get into something else, if that's okay.
Yeah, sure. What's going on?
Yeah, so coming from someone who's just now starting, what's the best advice you can give to kind of learn the terminology behind these charts and then kind of get a grasp of doing what you guys are doing? Because I understand it. I've watched like hours and hours of videos. I've gone through the IML Academy a few times, but still getting a good grasp on it's just a little difficult.
Yeah, you need to master the basics. Once you master the basics, you can move on to the intermediates and the advanced courses. That's one thing I really understood when really starting this off, is that you need to understand the slang, the talk that they talking about, he talking about, she talking about. And with you knowing what exactly, what a currency pair is, what is support, what is resistance, what is a trend line, what is supply and demand, right? You need to understand those things first before you move on to the intermediates and advanced courses, like I said. So regardless if you watch IML TV over and over and over and over, what I'm going to tell you, on different days, you're going to wake up on a different side of the bed. You might read a certain part or a certain section of IML Academy, and you might, retain a different piece of information that day. You feel what I'm saying? Because you need to understand the basics. You know what I'm saying? You can copy and paste all day, but if you do not know the basics, you're going to have a hard time.
See, and that's what I want to learn. I don't want to be having to use swipe trades all the time. I want to be able to look at it myself, get an understanding, get a grasp of it, just keep trying to get information, I'm assuming then, and just slowly work through the process of understanding it.
Yeah, and what I can tell you, I don't know who your upline leader is or whoever it is. Find somebody in your group chat that is a trader that's always talking about pips, that's always giving markups or either giving signals. Always use for somebody that's in the group that knowing what they're doing. Use them as support. You can ask plenty of questions at the end of the day, because if you ask that certain trader questions, they're going to give you answers that you want. So this is the thing. I tell people this all the time. This is how people in my team are always staying and learning. What I tell them is to go through basics 1 and 4. Through each segment of basics, take notes and write any important questions you might have on that certain segment. So with you doing that, you go to the webinar, say for example, you're on with me and Kim, and you're like, hey, Gustavo and Kim, I went through basic 1, part this, part that. I have a little trouble figuring out what this was. Is there any way you can help me? Boom. You asking the question, I have an answer. This is the thing. We'll give you the answers. We'll give you the info you want. You just need to put in the time of figuring out that info, if that makes sense.
Yeah, that makes sense. I understand.
Yeah.
All right, I appreciate it, man.
No doubt. Okay, so with that, we're going to move on. I'm going to chop it up for the next 10 minutes. I want you guys to pay close attention, not only to what I'm going to, show you guys, because a lot of people always in my inbox, and I say this every single day, and I say that passionately. People are always in my inbox asking me for help when it comes to these charts. I'm going to tell you this right now, and I'm going to be completely blunt with everybody. I don't care who you are, where you're from, right? You have to put in the work. You have to put in the blood, sweat, and tears. There's a reason why I'm reaping the benefits now of Forex trading, because I put in a lot of time into this. Does that make sense? So I want you guys to pay close attention of understanding how I mark up a chart and what I use for confirmation to enter the market, if that makes sense. So guys, please pay close attention. Let me and screen share for me, Kim, so I can share my screen.
Yep.
Let's see. Okay, awesome. Let me turn this off. All right, what I'm gonna do right now. Let me mute everybody. Okay, what I'm gonna show you guys is a markup in a trade that I had this past week, right? If you guys are on swipe trades, if you take swipe trades, this setup right here that I had on USDJPY was one of the setups that I called out. But sadly, my buy limit order missed by 0.3 pips. Let me repeat that. It missed by 0.3 pips. So I want you guys to really understand, right? So right now, I have this chart. It's called USDJPY. If you do not know what it is, there's a lot of new people on here, which is totally fine. What I like to do when I look at my charts, I like to look at the bigger picture. Just like Ms. Kim said, right? We like to look at the bigger picture, because with the bigger picture, we catch a bigger move. Does that make sense? So on the weekly and the daily, what do you see? You see a decline, right? The dollar is weak. There's many things you can put into perspective of looking at the certain currency pair. The dollar is weak, the yen is stronger, right? We're at major support levels. Let me go back to this. Look at the weekly. We're at a major support level. This broke this trend line. This is key right here. Every major level that is breaking out, guys, it has to be tested. For example, look at this. This zone that we have right here, right, is what we call a support zone. I'll put it a little lower, right? There was reactions on price here, reactions on price here. But price came here and broke out of this zone. But as it broke out of this zone, right, there was one more retest. I'm going to say this again, right? Every major level that is broken, whether it's a resistance or a support, must be retested. Let me say it again. Any key level of resistance or support that is being broken out must be retested. Right here on a daily time frame, USD/JPY broke out of this neutral zone right here, this support zone. Because look at it. Every time price, even in 2017, right, March, April, May, June, all last year, every time price hit this area, it had a reaction and went to the upside. Look at the reaction that it went to. It created a resistance, right? A lot of people say, oh, support and resistance doesn't work. Well, guess what? I'm going to show you that it works. What happens? It had a reaction to that level where it bounced off. People say, can you buy support and sell resistance? Well, yeah, that's what you're supposed to do. But don't have the terminology, don't have the mindset of, oh, I need to buy low, sell high. This is not crypto. This isn't crypto. This isn't Bitcoin. This isn't Tron. This is foreign exchange, right? With this being, as price did what it did, it came down, created a low, made a significant reaction, came up, created a resistance. What happened, right? One thing I'm going to tell you guys is history is going to repeat itself over and over and over in this market. So as history does what it does, look what happened. Price came back down to the same region, but missed it by a few pips and had another reaction back to the same resistance that was what? Already created, right? If you seem lost, if you don't know exactly where resistance or support is, always look left. Always look left. As price came here, created this top, right? You call it a double top, whatever you want. It came right back down to the same level of where it had a reaction. And what is this level that we're sitting at right now, guys? Is 108. For all my UJ traders that like to trade USD/JPY, we all of us know that 108 is a very key level of where price played a big role. So what I'm going to do, I'm going to go to my perimeters on my support and resistance line, and I'm going to put a key level at 1078. 1078, right? Key level. Check this out. As price did what it did, it broke out. Look at this support right here. Check out the support right here, guys. You look at the 4 hour, right? You have all these candlesticks that play this role right here. Right? Each candlestick represents what? 4 hours, right? Look at this right here. Let me do my scale fix. 1 second. Pay attention to this. Price rebounded off of this level, not only once, but twice, 3, 4, 5, even a 6 touch. But as you guys can see, if you look at the 4 hour, right? People talk resistance, support, resistance, support. This is phase one I'm going to show you. If you know price kept hitting this support level of 108, 700. This is the level 108, 700. So 70 pips from the 108 key area right here, right? Look what happened every time price hit that level, right? 108, 700. What happened? It bounced. Reaction bounce. Reaction bounce. Reaction bounce. This is one thing. If you know there is rejection at a certain resistance or a certain support, and you see wicks like this, if you see rejection at a key level of support or resistance with wicks, that's going to tell you that it's not going to break through that level just yet. But wait on it. As time goes by, what happens? Price does what it does best, and that's move. So this comes here, hits the key level, right? Bounce, bounce. You could have bought, right? Came down. You could have bought again. But price came, and as I look at the daily time frame, the daily gave me all the confirmation in the world. Look at this candlestick. It closed as a doji, not a full doji. But this is one thing I always realize. If I know I'm going to sell on a main key level of support and it's not breaking just yet, in order to find that breakout, I'm going to look at the one, key level, of course, and two, I'm going to pay attention to candlesticks. Look at this right here. This came down. This right here came down to this level. Imagine how many buyers got caught up. Imagine how many wicks how many stop losses got taken out. I'm going to put this one red just so you guys can see. Price came at that level, reacted, and it got buyers committed right before it broke out. So price came down, right? Buyers got in the market right at this low of that key level. This faked out all the buyers. This right here closed as a doji. If you see the daily time frame and you see a doji being closed, especially at a key level, expect to sell or buy, whether it's whatever structure you're trading. Because not only did the daily give me confirmation, but the key level gave me confirmation of the breakout. Multiple touches, right? I believe, and I say it all the time, 3 to 4 touches are your magic numbers when it comes to selling and buying off major key levels of support. 3 to 4 touches, right, are your main numbers of understanding when to buy and sell. For example, we're going to take it here. Look at the bottom down here. You see UJ created that low, right? It hit that low one time. It came down to 105 for the second time. And then it comes back down for the third time to the same low. So we pay attention to this, right? Let's pay attention to this. As price came down, created this low, it came back up. It came back down to the same low. Price went up, right? It came back down to the same low. But ask yourself, how many touches do we see here? We see 1. If you can count to 3, you can make money with Forex. You see 1 touch, 2 touch, and then significantly, of course, that 3rd touch. I've dumbed it down that 90% of the time on the 3rd touch, that price is going to make its move. Now, this is the thing. As you guys can see, right, that 3rd touch, I had a reaction. Some people could have bought, all right? Some people could have bought, or some people could have waited. But this came below of that level of where it already hit. And what did it do? It looked for stop hunts. For every major breakout, wherever it is, whether it's resistance or support, expect for your stop loss to be hunted. Because market makers, they're going to know that you're getting in the market when this big move is happening. Does that make sense? So on the key level, right, let's break it down. I have 105 flat. Hold on. $105, 100. Hold on. 105. Hold on. Okay, so around the 105 flat area, right? When I say flat, 105.000. It is a flat price line. Does that make sense? A flat price line is another way of identifying a key level. As you see right here, 108,700 up here of this green bar is a key level, right? But this right here, I dumped it down. Like I said, 1, 2, 3 off that third touch. Look what happened. USDJPY from that third touch of support, of a key level support. Look how many pips it went up. Look at that. Almost 200 pips. Now, this is the thing. If it bounces once and it goes up, yeah, you can buy it. It bounces twice, yeah, you can buy it. But look what happened. I had more of a reaction on that third touch. But this is the thing. This trend is not done. Take off the scale fix. What I'm trying to show you guys is that key levels are very, very important when it comes to trading. Look at this right here. This is a resistance. Up here we have 106,500. Oh, snap. 106,500 is a resistance. As I go to the hour and 4 hour, right? We see that USDJPY at this moment in time is breaking resistance 1. But as it breaks resistance, there has to be a retest. I don't see USDJPY going down any much longer. I see it at least going from where it's at now. Honestly, this right here, this zone is crazy. Like, I honestly think I could buy this zone right here. Because look at it. It broke out this resistance. You pay attention to structure, right? Look at this right here. Every time price came to this structure, this zone, there was a reaction. Reaction, came back down, another reaction, then it broke out, and it came back to the same, broke out, came back, another reaction, comes through, creates a high, comes down, breaks out of the same zone, and then what happens? It goes back up, tests the zone, and then it drops. Look what's happening right now. Price is breaking out of that resistance, and it is retesting this resistance. I call this the infamous breakout retest. Breakout retest.
Good. Won't you check the fib level of the retracement?
Check this out. As a breakout retest, right, we want to pay attention to candlestick formations. If you do not know how to read candlestick formations, go to Google and read, and Google candlestick formations, candlestick patterns. What I'm going to wait on for USDJPY is for this to close above this resistance level of 106,500 in order for me to look for that clear buy. But if this closes below this resistance, I'm not looking to buy anymore. But as this is the main thing I always say. Imagine being able to catch these trades, right? USDJPY, EuroJPY, just by paying attention to price structure, right? Price came here, last time, tested for the last time on that third touch, and look what happened. It went to the moon. So show you guys exactly what my trade did, right? I called out a buy limit, and I'm gonna break it down simply. Check this out. This is what I did. I grabbed my Fibonacci tool. If you do not know how to use Fibonacci, it's okay. You will learn eventually on multiple sessions that we host. Price came here. I grabbed the fib from the low to the most recent high that was created, which was right here. This wick. I'm never gonna get tired of wicks because wicks make me a lot of money. But as price does its reversal, because price is always gonna do what it does, right? I waited. As you see this structure right here, let's pay attention to the structure. There was a reaction at this level right here. So this level I'm gonna pay attention to. Look at these candlesticks right here that are forming. Look at this. It came down, it reacted, it went up, it came down, and then it broke out. Look at the off the hour. This closed as a hammer on that level, 105, 300. 105, 300. It closed on a hammer, and then it broke out of 105, 300. So the same level that got broken out of came back and got retested. So what I did, I grabbed my Fibonacci tool from this low to this high, and I told myself I'm either going to enter off the 50 or the 61.8. And I like to enter off of the 50 because, look, I like to base it off structure. You see these wicks right here? And you see these wicks right here? I'm looking for price to come back to that same exact price level right here and then take off. As I zoom in, I put my buy limit at 105, 300. Look at this, guys. 105, 300, and it missed by 0.3 pips. It literally hit my entry. If it would have hit, I would have had no drawdown, meaning you could have put a standard lot on this trade, whether you had a small account or a big account. You could have put everything on this trade, and look what happened. From that entry, it came here. It came back to the high, right, where I first grabbed where I put my fib tool at, right? Because if we would have bought, we would have took profit right here because this is a what? The most previous resistance. So if you're lost, right, you could have bought right here, and you're like, where do I take profit, Gustavo? Where do I take profit? Look left. Look left. If you're lost, always look left. Look what happened. I caught a resistance. So with price going up here, boom, I got out to be conservative. But if you know the whole trend, you know where the price is going to go. Look at this right here. It went right up to another demand zone.
Hello.
Right here, hit my entry, and look what happened. It went to the freaking moon. Look at this. From that entry all the way up to the demand zone is 157 pips, almost 200. I could have caught 150 pips in just a few hours this morning if my buy limit got triggered. But it's okay. This happens all the time. I don't know if you guys took my GBP NZD trade I sent out like maybe 3-4 weeks ago. It missed my buy limit by 0.2 pips, and it hit my take profits for 250 pips. I'm explaining to you why this happened, right? Because key levels are always going to play a big role. Look at this right here. This reaction off this level gave me confirmation. So I was like, you know what? This has to go into a buy because I looked at structure. This broke last week's low. Look at it. Look at last week's low. It broke above it. So if it broke above it, it came back and look, it retested the same level it broke out. At the same level that was broken out, what level was that? A key level. Very simple. Do you see any indicators on my chart? Do you see any crazy lines on my chart? Do you see anything special that's going to tell you when to buy or sell on my chart? No. I don't have any problem with people that use indicators. But look at this. I showed you from pure price action, from key levels, support and resistance, and the Fibonacci giving me the green light to enter the market at will. My analysis played out lovely. Now, I was looking to trade, take this trade for 100 pips. If I know I'm looking for that breakout, I'm always going for 100 pips. But I'm going to tell you this right now. 50 pips a day keeps your 9 to 5 away. Let me say that again. 50 pips a day keeps your 9 to 5 away. If you're on this webinar right now and you're constantly catching pips every day and then you enter the trade and then lose all your money, you need to practice what I'm preaching.
Making those pips every day, and I wake up, I have my alarm set.
All right, I had to mute that. I don't know who that is. 50 pips a day keeps the 9 to 5 away, right? If you know what you are trading, 2, know what you are risking, and then 3, trusting the process, everything is going to fall into line. There's over, I don't know how many people that are personally on my team here. And you guys know, Josh, you're one of them. This kid is a prime example of why I bring the value of what I bring. There's a reason why I keep my group special. Because this kid, he joined IML in 1 week. He put $700 into an account, and he flipped it to $8,000 in a matter of 2 weeks. Now, results aren't typical, but he's not typical. He flew out to Las Vegas, showed me a $4,000 withdrawal. Withdrawals never lie. But what did he do? He sat, he soaked up the information, he listened to the right people, and now he's flourishing. So I want you guys to really understand. I can sit on these charts and tell you this is going up, tell you this is going down, but I'm going to tell you why it's going to go up, why it's going to go down. I can predict the future in these markets just by taking my time out of the day to analyze them. So if you guys are going to take that leap of faith to mark up your own charts, guys, you need to trust the process. If you think you didn't do good because you didn't mark the chart up the right way, well, guess what? Ask somebody in the group. Ask them for, an opinion. Ask them for advice. If you're willing to take constructive criticism, you're gonna grow in this industry.
Every single day, how I'm doing it, it's not gonna sound like.
I don't know who that is that keeps just unmuting themselves. Please mute yourself. Like I said, everything that comes on here that me and Kim are trying to show you guys, it's all possible if you put it into work. If you implement the knowledge that we're teaching you guys. See me, there's nothing fancy about me when it comes to trading. You're seeing my charts hands-on right here. And I'm giving you guys nuggets that people pay thousands of dollars for. I have private students that pay me thousands of dollars every single day, every single week to learn what I know. But if you were on this webinar, I hope you took notes. Don't be the person in a group chat, asking for reference onto this and that. But what I'm going to do, I'm going to be nice. I'm going to finish this recording and I'm going to send it to every single group. So there's no excuses onto why you haven't learned anything. So guys, understand you need to trust the process, know what you're trading, and 3, know what you are risking. And with all those things falling into line, this will work out for you long term. With that being, Kim, I'm going to give it back to you if you have any other words, because I'm about to close it out. Kim, take it away.
All right, guys. Well, I hope you enjoyed Gustavo and I's session. I'm looking forward to seeing you guys every Wednesday at 9 p.m. We have a lot more value to bring to you. We're going to, him and I are going to share our insights on the chart. This pair, actually, the USD-JPY, I was telling him when he was telling me that I missed his buy limit, I was telling him how this trade right here made me a lot of money today, and I enter it. And basically, guys, we're here to literally help you make money, and I hope you learned something today, whether it be from him and I or both of us. I hope you took something away today that you didn't have before, and looking forward to working with you guys all. I'm in Gustavo's team, and you have access to me as well. So looking forward to it next Wednesday with you guys. That's about it, Gustavo.
Awesome. Thank you, Kim. Guys, if you guys could please give a thanks to Miss Kimberly Torres in the chat. Please give her thanks, guys, because a lot of people don't really know what this lady is capable of. And just tonight, you're getting a little taste of what she's going to bring to the table. So with that being, guys, for all you guys that were on this webinar, thank you for taking the time out of your day to come listen to us. If you'd like, make a post, give us a shout out. With that being, we'll be able to like, share, and repost. And with that being, guys, I appreciate you guys once again. Blessed and grateful to be here. And with that being, I'm going to see you guys at the top because the bottom is too crowded. Later, guys.
Thank you. Thank you very much.
Know that. Stay making
I got a question.
Yo.
Go ahead.
Yo, how do I know when Kim go live next Wednesday?
You'll know.
Is it going to be on her social media or?
No, you'll know. You'll know. You'll get the link for sure.
All right, bet.
Yes, sir.
All right.
Everyone knows everything. I'm in the same group chats as Gustavo, so.
Okay, cool.
It. So I put my Facebook in there. I'm not friends with a lot of you guys. Kimberly Torres, request me on Facebook. Just message me. Hey, I was on the webinar. And just follow, because I give a lot of value, especially on Instagram. I record a lot on Instagram on my live feed where I'm going over charts. So follow me there on Instagram, and we guys will meet again soon. I put my Instagram on the chat if you guys want to follow me on Instagram. Take care, guys. It was nice meeting you all.
Quick question before you guys go. Can you just record every Wednesday session?
That's the plan. Don't worry, we got that.
Thank you.
No problem at all. All right, guys. See you guys later.
All right.
Bye.